Hello and welcome to Rising Stars again. I'm Vikram. The last 2 years, they've been buzzing for the fintech sector. The push coming in from the central government. So yes, more digital payments for sure. Also, a spurt in the fintech subsector of lending, which has a good share of interest from investors and venture capitalists alike. So now PaySense is on our radar, a digital credit platform that wants to make getting a loan quick and easy. Prashanth Ranganathan is a serial entrepreneur who has founded PaySense and he's joining us on Rising Stars. Great to have you with us, Prashanth. You know, there are lots of players within this entire space, this digital credit platform that you're creating. It has so much competition. So what do you think in 2015 to get into this?
Just prior to coming here, I was actually at PayPal, and I ran product for Asia Pacific for PayPal. And I think India was always on our radar, and I had the privilege of actually looking at the market very, very closely. And I think what I noticed was with a booming e-com kind of sector, there was a trailing kind of payments innovation yet to be had. And I don't mean the actual physical movement of money, which is obviously we've seen a lot of innovation in, but actually in deep credit. So transactional credit and credit beyond that. So that's what initially brought me to India. And yeah, I think what I wanted to build was something that harnessed all the technology and the data and everything else that's now available in our smartphones to be able to offer a consumer the kind of credit that they need.
What is the kind of credit? So to what end is all of this working? Because I see a lot of technology at play. I see your average ticket size is around 60,000 rupees. It can go from 5,000 to 2 lakh rupees.
That's
so
correct.
Obviously you have a very specific market that you're trying to target. So tell me what that is and how the technology play is geared towards catering them.
That's right. So yeah, this is a STPL, which is a short-term personal loan, which goes from 5,000 to 2 lakhs. Often the consumer is borrowing in a pinch. They have a life need or a lifestyle need that has just come up. These are not consumers who are keeping large bank balances, and they definitely don't have the time or the patience to get in line, to kind of queue up, to kind of fill out forms and go through a 4-day process or a 10-day process, and then find out that they perhaps have not gotten the loan. So they are looking for that extremely quick decision. They're looking for that simplicity, that clarity, that transparency that we stand for, and they're basically looking for this loan. So I'll give you an example. This is the loan a guy who's just admitted his mother in the casualty ward at Lilavati would look to avail before he gets to the billing counter. So he has 5 minutes, and that's the 5 minutes that we have to go from discovery to dispersal. And
5 minutes is what it takes.
That's all it takes.
So the technology piece that you've created around this, obviously you come from that kind of background as well.
That's right.
That must be a work in motion because what are the checks and balances over here? Because anyone out there is going to see that the space you're in is fraught with risk. You'd have to agree.
I agree. I think I would agree to a certain extent with a qualified statement that it is risky if you don't know who you're lending to, or if you're not passing all the checks that a traditional bank would be passing, all the 5 C's of credit, right? So I think we're proud to say that we pass the customer through every check. It's just that the hows are slightly different. And the hows are all, as in the what is all the same. Everyone goes through the same checks. The how we go about establishing kind of the credibility of the customer is different, and it's highly tech-enabled, it's highly data science-enabled. I don't know, everyone says it and speaks to it, but we are actually doing it. And I think the demonstration of that is actually that 5-minute loan that ultimately ends up in the hands of the customer. So I have a policy that if a ops agent, if a risk officer, if an underwriter ever had to touch this loan before it got in the hands of the customer, it's already untenable for us. So yes, you're right. This is a zero-touch loan, and most of our loans are now zero-touch. And I think that's the play that the consumer is looking for from us.
So business-wise, what is it that you're going after? Is it high risk and high returns? Because I see your interest rates are high. They're 1.5% to 2.5%, which is a high bracket to really cater to. But the need is urgent. So are you tapping into the urgency of the requirement of your clientele?
Absolutely. The urgency is a huge factor, but let me speak to that interest rate for just a second. So we charge 1.5% or 2.5% per month, but for a duration that's far shorter. So this is a small ticket. It's a 30, 40, 50,000 rupee ticket. It's held for 7 months. Now, if you went to the average bank and you got a 14% loan for 12 months, that is still more expensive in rupees terms than a PaySense loan that's a 2% for 7 months.
But typically, the same clientele is not going to be going to the bank to raise this kind of loan, right?
So for them, their options would be the gold loan around the corner, or the pawnbroker, the money broker, and those loans are definitely far more expensive and less digital and less transparent or simple than I think the PaySense offering is.
And in comparison to your peers, how do you stand with your interest rates?
I think we're in the same ballpark, if not perhaps almost exactly in the same zone as them. And I think this works for us. And I think we price our loans based on the risk of the consumer. This is the zone that we found to be our sweet spot. Often our consumer, to your point, is in a pinch. So they are looking for that. For them, it is to pay that bill that is actually top of mind, not the 300 rupees that they may
But
be paying.
Prashanth, right now, to make sure that the business is going at an even keel and is kind of racing ahead, for the kind of money that you've raised right now, I believe it's in the range of $7.6 million.
That's correct.
Already?
That's correct.
How far has it taken you already? How much is the burn and where is the maximum burn? I would imagine it is product and technology, is it?
Absolutely. So I think, 7.6 is what we've raised in a couple of rounds of financing. We have some very prominent investors on our board as well. The money is primarily deployed in human asset capital. So basically, this is a very expensive group to kind of keep together and kind of continue to innovate on a product. But ultimately,
they
our
would be in high demand.
Yeah, they are. And to kind of retain them is one part culture and one part payroll. So so I think, we are investing in the only asset that we have, which is our human capital. So and I think most of our money goes into that, and that's primarily determining our burn rate.
Right. So are you going to need more money anytime soon? Because I understand that you've spent about half of what you've already been able to raise.
Yeah.
So is this going to take you as far to kind of expand quickly? Because I understand you're in urban areas right now. You're in Delhi, Mumbai, in Chennai, in Bangalore. But the idea is to go down the tier 2 towns and cities.
Absolutely.
Isn't that the idea?
Absolutely.
For the ticket size that you're offering.
Absolutely. So I think you mentioned, do we need more money? I'll always take any money that people are willing to offer me. And we could always do more with it, right? So, but that said, I think we're very proud to say that on a per loan basis, we are break even. So on a variable basis, the company is already break even. That said, we do have some other costs that we have to cover. So that So I think any further raising of capital that we do would just be for expansion reasons.
Yeah.
Thanks to all the development on the India stack and everything that's happening with bank accounts being opened and Aadhaar becoming a mainstream concept, I think we're building on top of that. So I think we could not have even imagined in 2015 being in the tier 2 cities of India or the tier 3 cities.
Sure.
But I think that's now very much a reality for us and for many other businesses. So I think.
But overall break even is still about a year and a half away.
A year and a half out. That's what makes this a fantastic venture business.
Yeah, well, the opportunities are all there. Like for all the reasons that you spelled out, the India stack is obviously a very, very exciting proposition right now, and I can see where you're coming from. But of course, the competition is just as stiff, and to be ahead of the competition, product, technology, experience, and of course your interest rates, those need to be extremely competitive. We wish you great luck on this journey.
Thank you very much.
Such a pleasure talking to you.
Like my pleasure as well. Thanks.
And that's Rising Stars, at least for the moment. There'll be plenty more entrepreneurs. Do stay tuned.